I'm having an old person moment.
Yeah, me too. It's definitely Dempsey. Can we clarify that, please, with that clarification sound?
Are you actually going to clarify? Are you going to clarify it with the actual name?
Hang on, I'm tuning it in. Tuning. The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situation, or needs. All participants in this podcast may have a financial interest in any or all of the products or securities mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objective, financial situations, and needs. If any private products are detailed on this website, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to episode 33 of The Money Path with Bob Iacchino and Mike Arnold. I'm your host, Stafford. Today we're joined with our guest, Alexandra Lively. The What and the Why segment is sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join the team with a conversation on the markets that's already in progress. You know what this show needs? This show needs some ratings. I think everyone should go to iTunes and write a great rating for our show. That's how shows grow. We need your help out there.
We do. We need everybody's to come rate us on iTunes or Stitcher or whatever else. Whatever else you could rate us. You can rate us good, bad. You can just rate us. Well, if it's bad, just rate Bob. If it's good, rate me. Oh no, the cow's in the room.
No, we got sound effects.
So this show needs ratings out there, ladies and gentlemen. It's a call to action. It's your mission. Keep this show alive.
You know, speaking of calls, Bob, you made a crude call.
I did. We had a crude trade on CNBC. It was, I don't think they posted that one, so I don't think you have a clip. But the crude call was moved to 48.60. I'm sorry, 46.80. And subsequently it went there. I mean, I talked about buying it at 42.75 or better, but that's only because when we were on the show, we'd already talked about buying it hours earlier, and the show time is the show time. So it had already rallied up. So it's safe to say that we were already theoretically in the trade when the show ran. So on the show, I didn't want people to chase it. So I had to say, you got to buy it on a pullback to 42.75, which didn't happen. So again, you're always better off listening to the show than you are listening to anything we say on TV, because TV dictates when we say it. But yeah, and it went there, and it went a lot further. Like my last CNBC, which was kind of recapping that, I told them it was going to go sideways now, and I was wrong. I mean, it's rallied quite a bit since then. Quick definition of sideways means I don't have a buy or a sell anymore. Right? Once it reached the target, the risk reward is so far off because the rotation zone is so far away now. But there was no safe place to put a stop if you bought it. So it wasn't about selling it this time. It was just about, I don't have a trade in it right now.
Yeah, it's not about catching them all. It's about catching the right ones.
Well, yeah, that's a great point. Let me reword it for you. It's not always a trade. There's not always a trade in our opinion. That's the way markets move every single day. We're not placing a trade in every single market every single day. The parameters have to be correct.
And we wait for our setups, and our setups dictate our trades, not the market, not having to put something on.
What is that?
That was Mike's Scientist Man segment.
Oh, I like that.
That was Scientist Man?
All of this needs work, okay?
Now you're doing this. You asked for ratings, and now you're doing all this needs work?
As on the last show, it's about say what you're going to do and do what you just said, right? And last time I said I would redo the whole podcast studio here and integrate like a cart machine, like they used to have in classic radio. So I have 10 sounds that are close to our list of sound effects. I'm trying them out a little bit early. So far, I'm not happy with anything.
The cow in the room. So Speaking of cows, I talked about copper last week,
Mm-hmm.
and it did not trigger.
Didn't trigger?
No trigger. It's sitting against support at its essentially 200-day moving average. It's gotten this little consolidation. It's still a valid call out there. Nothing's invalidated it, but I don't know when it will trigger, so nothing to report on there. And I was going to follow up on silver.
Mm-hmm.
You know how I always jump the gun with stuff, then I go, I don't have a what?
Yeah.
I'm saving it for the what.
It's like I don't have a what today. We
Yeah.
just talked about it in the actual show.
So, let's see. So, are you able to look at the show notes, Bob? That's a real question.
Yes.
You are.
Yes.
Hey, HFT might be blowing up with that sound effect because Nasdaq actually, they're announcing an extended life order type. So the order would allow the order to remain live for at least 1 second to jump ahead of all orders at the same price do not. So essentially, if you're going to leave your order, it has to be minimum in the market for 1 second. A lot of these high frequency trading firms, they put in orders and they delete them sub-second. It's just rapid fire trying to figure out where the orders are resting. Well, this order type, you actually jump ahead in the queue, but you have to leave it in place for 1 second. So that's
HFT meaning high frequency traders.
High
frequency trading.
Yes.
Here's my question about that story. If they are deleting orders in sub-seconds, when would a 1 second order matter to them? In other words, they would never have an order to be left in front of if they don't leave them in for that long, right? I mean, if I put in an order and it goes in behind, let's say I want to buy Exxon at 88.15, and so I put it in and it sits there for 1 second, how many thousands of HFT trades have been in and out at that point?
We don't know, but since they're trying to compete with the IEX, they were all worried about the IEX because of the way it's routing orders and its persistence model. And, they were looking to take shares away for people who want to submit orders where they're not going to get picked off with these high frequency traders and actually get filled at a price they wanted. So that's sort of why they're doing it. So they're actually taking IEX, which is a new exchange model.
Yeah, tell people what IEX is.
It's a new exchange. It was put together by all these high frequency trading guys. They all said this is not fair. We're just going to put together a new exchange. And the other exchanges I think they were trying to sue to stop them and everything else. And pretty much now it looks like, well, we can't stop them, and we're afraid that they might take some order flows. So it looks like the Nasdaq is trying to say, okay, we'll try to play in your space then, by at least possibly introducing this order type. There'll still be plenty of places the HFTs can trade, but they don't want to lose this order flow to the IEX then. So it looks like they're taking it seriously now.
Yeah, it's high frequency trading is a really big ethical issue. It's really, really big because, first of all, I don't think you can out technology the high frequency traders. So by saying, okay, we're going to invent an order type that's if it's there for 1 second, it jumps ahead. I would have no idea how they would design their next order type, but it's gonna be designed around beating that. So I don't think you can out technology HFT. If you don't want HFT in there, which we'll take the CME group as an example, right? The CME group stock has been on a tear, right? And they allow HFT in certain markets. And it has grown their volumes tremendously. I mean, tremendously. Their volumes have been just through the roof. And I mean, the stock's basically gone up since 2012 when they first started to allow these guys in. And so you're asking them to police what is essentially doubled the stock price. So there's a huge conflict of interest there. So the only thing that beats it is competition, just like anything else. So like the only type of thing that beats it is an IEX. I don't think you get HFT problems fixed by creating a technological solution within the model that still allows HFT to do whatever they want.
Well, we will see how this is going to unfold. It was just interesting news out there because it's the first time I've followed the IEX for a while, and it's the first time that I'm seeing that there might be something starting to shake up. Speaking of the CME group, I just called up the stock.
Yep.
You mentioned this earlier this year. It did break out of a consolidating horizontal channel back in July with the full target of 110.66. It's now trading 106.36 and has reached the halfway point stop, moved the stop up level. So it's just slightly over. It actually hit the 62.5% gain extension from the horizontal channel. And so this can run higher. The
Chart time frame?
This is weekly, I said.
Okay. I didn't hear weekly. I don't think you said it, but that's
yes,
okay.
Back on the week of July 11th, it triggered the channel. And this horizontal consolidation was pretty much in place since what? Since March of last year. So
I think the high is 106.36, Mike. I got it current
this week.
Well, you said it's currently trading at 106.36. I think it's 105.72.
It's trading 105.72. I missed.
Yeah.
106.36 was the high.
Yeah.
All right. I just wanted to throw it out to people. So if you are along the CME group, according to his horizontal channel pattern we track, it could still run up to around the 110.
And I ask you, Mike, is risk reward good if somebody wants to get in now?
No.
Or no? Okay.
If
you're currently long it.
Yes, if you're currently now, if it does pull back, maybe to around the 101 to 102 level, and then turns back higher, that could give you decent risk reward to get in this trade. So if we do see a pullback, for about $3 to $4 on CME, it could be a move to get in higher, and then I'd put my stop somewhere below the highs of this horizontal, or below. The stop would be lower than the highs of this horizontal channel that it broke out from. So the stop would be somewhere below the $100 mark.
The cattle market at the CME, completely not really off the subject, but the cattle market in the CME has the volatility has just gone through the roof. I mean, it's like at record highs, and it's just funny. They're calling it the meat casino, which I just thought was funny. So that's all I have to say about that. There you go. There you go. Thank you.
There we go, Stafford.
Now we got a show. Good night, everybody.
Now we have a show. Now we people have to stay tuned for the Whopperito reviews later on in the show. Well, speaking of another horizontal channel that did reach its pattern. Did I talk about this last week that IBM reached its full horizontal channel breakout? It actually reached last week.
I do not believe you did.
Well, it did reach its full target of 164.77. And the high last week was, let's see, what was it? 164.95. So it just slightly exceeded the target, and now it's pulled back to 160.04, back into the R zone. I don't have another trade setting up there yet. But it was interesting because I was reading this week, IBM, they have a True North chip, which is a cognitive chip, which sort of resembles the human brain. It has 4,096 cores combined to create about 1 million digital neurons and 256 million synapse connections. So it sort of mimics the human brain, but Samsung's now taken that chip and plugged it into its dynamic vision sensor that processes digital imagery at a blindingly fast rate. So they're talking about releasing digital cameras or DVS equipped, anything that captures high frame rates at about 2,000 frames per second. Most digital cameras max out about 120, and I'm talking consumer grade. I'm not talking the high-end ones. I was talking to Stafford earlier this week, and he pointed out that there's some high-speed cameras like the Phantom, which can run HD 720 at over 28,000 frames per second, but these Phantom cameras, they start for about 50,000 to go to 150. So we're not talking about them competing with that, but these could roll out for Samsung a whole new range of these digital cameras that are incredibly fast that could be geared towards consumer and virtual reality stuff. Fascinating how IBM built that chip, and now it's being used to power these cameras. I thought that was very interesting.
Yeah, it definitely would push me more toward the IBM stock than it would toward Samsung.
Yeah, exactly. But this IBM stock, I mean, if we get another pullback, we'll keep monitoring this because it could pull back it's pulling back into the weekly rotation zone now. We get another turn higher, and it could still run up around to the 170 to 172 range, but there's no trade yet. It already hit its horizontal channel trade. Very interesting, but I wonder if somebody's going to grab Twitter. Like, I'm still waiting. Is somebody going to buy out Twitter at some point?
You try and figure out who matches up with Twitter.
Comcast.
It's got to be somebody like that. It has to be.
Well, Twitter's talking to Apple to get their Twitter feed, Twitter on the Apple TV.
Well, that's just an app. That'll be just an app.
Yeah, but they're actually doing it because it's actually sort of interesting. We'll touch base on this with Apple also, but Twitter, can stream the Thursday night football games, this thing. And
they're going video, right? We talked about that a few podcasts ago.
Right. And so they're streaming the NFL games, and now they're looking to actually get it onto the Apple TV. So if people can possibly watch the Twitter streaming of the NFL football games.
That now seems valuable to me if they can get linked up with Apple TV. But it's got to be somebody with content that buys Twitter.
Right. What was interesting also is why I brought that up, because we've had a pretty massive horizontal channel, and this could be on a daily or weekly time frame in Twitter, and that's been around since the lows in February, retested in May and June, made highs in March, retested those highs in July, finally broke above there, and we got a valid close. It's now dipped back to retest that prior resistance, becoming support, and looks like it's turning back up. If this pattern unfolds, then we're looking at Twitter could rally to around the 23 level with a maximum target of the 24.75. Really, why I brought up that also potential buyout is because that's something that could propel it there, but that's the pattern for the target. Now, what's not going to get Twitter bought is did you see they came out with promoted you know this whole thing where you could put stickers like on your photos and your tweets and everything, like you can stickerize. So now they have promotional stickers, which I don't get. For Pepsi is now having promotional stickers, so I guess Pepsi paid them, and now Twitter came up with stickers that are sort of like Pepsi branded. I guess you get
like, why do I want
maybe
Pepsi
you just
on
like
a
Pepsi a lot and you want to put a Pepsi sticker on your photo.
Better get a sticker for a glass of rye. I don't know what else. Why would somebody want Pepsi on their picture? Real quick, because I wasn't done with the whole stream thing. Joe Rogan had a great word for. He didn't say this in relation to Twitter. He said this in relation to social media and society in general. But he called it casually outraged. And that's why if Twitter can actually link up with content, especially live content, things like presidential conventions and town hall meetings and things like that, people are going to flock to that to watch it, sports events. People are going to flock to that because they can be casually outraged on Twitter anonymously and then just go about their lives after that. That's valuable. That might even make it so that they don't need to be bought out. Jack Dempsey's brilliant. Jack Dempsey? Is his name Jack? It's definitely Dempsey.
I know it's Dempsey.
And I can't find it. So.
Therefore, it's not clarified. Cut the sound. Cut.
Mr. Dempsey is really smart.
Mr. Dempsey is very smart.
Jack Dorsey. There's why I couldn't find it.
What?
His name's Jack Dorsey.
There you go. We were
Wait
way
a
off
minute.
base there.
Okay, hang on. I got a story here that calls him Jack Dorsey and Jack Dempsey in one story. I'm looking at it right now. The headline it's from cdanews.com, and it's dated January 6, 2016. Twitter CEO Jack Dorsey promoting the idea of 10,000 character tweets. Very first line. Twitter CEO Jack Dempsey is promoting the article.
That's something that got by the editors.
It is Jack Dorsey. Jack Dorsey's really, it's not Dempsey. It's Jack Dorsey. Jack Dempsey was, of course, a famous heavyweight boxer, I believe in the 20s. Maybe the 40s. Can we clarify that? We don't need to clarify that.
We don't need to clarify that.
Speaking
of clarification, because we tied in Twitter. Now, this I mentioned Apple and Apple TV, so now I'm going to talk about Apple. That was my segue, but it sort of we got sidetracked with talk of a CEO's name. So we triggered a double bottom. Apple did trigger this double bottom back on the 27th. I'm looking at a daily chart right now, 27th of July. Moving the stop target was 108.21. We're now trading 108.99. We've reached a high this week of, what was the high this week? 110.23. It still has room. The minimum target on this, and this would be a two-target trade, would be about 111.34. The maximum target, 114. We'll call it 114.50. So the Apple still has room to run higher based off this trigger double bottom pattern. But did you see that Tim Cook did a pretty big interview with the Washington Post, and there were a number of things in there? Did you see that interview, Bob?
No.
Yeah, he's talking about one of his quotes. I think it's in the best interest of the U.S. to have corporate tax reform, regardless of which political party is in charge.
I did see that. I'm sorry, I did see that. Yeah.
You know, because if you look at it, the U.S. rules today that international companies like us and many others can keep their earnings that they can earn overseas, keep them overseas, and then bring them back. It triggers the tax liabilities. So he's really talking for these tax reforms, and Apple's pretty much not going to bring their money back into the country until there's tax reform.
All this stuff is ridiculous. When you think about the amount of money this country could be generating and the amount of new jobs it could be generating, and this populist crap that comes out of all right, that's enough. It's just ridiculous. It's a money grab. Some governments have gotten smart, like Ireland, and they've decided not to do it. And what's happened? Companies have flocked there, and jobs have been created. I mean, it's simple economics. It's not complicated.
It would just flock back here. It would fly. It would fly like that new Intel drone that they just talk. Intel's getting in the drone game. They're going to be releasing a new ready-to-fly drone called the Arrow. What's different with this is they're targeting software developers rather than casual drone hobbyists or commercial drone operators. So they're sort of going after the whole development aspect of drones. So get the drone, and there'll be the software development kit, and it's really targeting more of the software developers. Also, why I wanted to bring up Intel is because this is a stock that I'm looking that's got a pretty powerful chart pattern going on, and we could see it reach to levels it has not seen. It made highs back in November of last year up around the what were those levels? The 37.90 level. We're currently trading where are we currently trading? 35.16. There's a pretty bullish setup on this, though. I'm watching for a close above 36 to trigger a target of 38, those last highs. If then we can get a close above the 38, we could trigger a run to the 41.50 mark. So that's something I will be watching. Just wanted to throw that out there along with that news about their drone for people looking for Intel that does pay a dividend, and it's not a high flyer stock. It's now sort of a blue chip stock that could be in a good place to move higher. A couple more updates. Now this is what's keeping Netflix from triggering its massive monthly double top we've referred to multiple times. But quick little snippet: they're doing the reboot of the Gilmore Girls. I know that's one of your favorite shows, Bob, and they're having to release
anything that talks about more girls. I'm in.
they're having to release the 4-part series all at once because they're petrified of their fans. They were going to roll it out. The I guess the director or somebody wanted to roll it out over a series of weeks, but their fans were becoming outraged, so they're just releasing it all at once. You know what? And that will might keep their stock propped up. I'm being facetious. That was my quick Netflix update. Uh, and finally, with the TV tie-in, well, I'm tying these things together. I'm really nailing this down. We have Amazon's bringing its free episodes of its original series to YouTube and Facebook. Before, they'd only release little snippets of them, but now they're starting to release full episodes, especially like the first episode of any of their original series, and putting them on YouTube and Facebook for people to watch for free. I guess hoping to entice them to then become an Amazon Prime member and watch the rest of the shows. This is pulling back on a weekly time frame into the potential rising R zone. So I will be watching. It's just starting to pull back, so we could see a couple week pullback in this, and it could be another buying opportunity for a new leg higher in Amazon. The full eventual price target, and this can take multiple weeks or months to unfold, but a full massive GAN extension target for this is the 889, really the 890 level, nearly 900. But again, that's over a series of weeks and will be a series of rotation trades. So just wanted to update the audience with that news.
Amazon's a multi-generational buy to me. I've decided that after talking last week, as we did about Walmart, Jet.com. And Amazon's, I think this is a multi-generational buy. I think there's going to be a stock split at some point, but otherwise they're going to Berkshire Hathaway levels in terms of their stock price. Right, that's a little bit of an exaggeration, but Amazon is one of those buy and hold to me now at this point. I don't even want to trade it anymore. I just want to stock it up, stockpile it. They're beating everybody, including Walmart. They're beating everybody, including Walmart.
Well, Walmart just released earnings. Did you notice that, Bob?
Walmart stores is reaping the benefits of spending big to boost sales. So yeah, their existing U.S. stores sales in existing U.S. stores rose for the quarter, up 1.6%. I think they're the only significant bricks and mortar that saw more traffic, whereas like Macy's and Target, just horrible traffic. Target, by the way, supposedly, this is just talk in the market, has suffered from the neutral gender bathroom policy they put in place. There's been like a boycott in some of the more conservative areas. Per share profit outlook, they lifted that to from $4.15 to $4.35.
You're back to Walmart,
$4.15.
right?
I'm back to Walmart, right? And essentially, they gave stronger guidance. So they beat and gave stronger guidance, which is unusual. They're unusual in this climate.
Yeah, and you mentioned Target. They released their earnings and they cut second quarter comparable sales were down 1.1% versus an estimated down 1%. They've cut their outlooks and they see their Q3 and Q4 same store sales flat to down 2%. They got hit pretty hard, and they have a massive, on a daily time frame, a very sloppy double top. This is not one I would use to short a stock. It did trigger on that earnings miss and the revised downward guidance. But if anybody's ever looking to pick up Target stock, the fascinating thing is the target for the double top is
the target for the target
is literally $66. We were trading down around 65.93 back on June 14th, and back in May we were 65.50. So this, if the pattern unfolds the way I expect it to, this would sort of target going back to those lows to retest those. So I would not be looking to pick up Target shares before we saw it retest those lows and then form some kind of base.
Yeah, Target, JCPenney, and Walmart theoretically are they fight for the same clientele, theoretically. I think everybody would agree the Target might be slightly higher end, or at least perceived as slightly higher end. And it's almost like Target and JCPenney were operating on another planet than Walmart was. Because Walmart did well and Target got beat up, JCPenney got crushed. Target was down almost 8% after their release. JCPenney down 5% after their release. Just crazy.
Now we're sort of tying into multiple things with earnings. As of then, now this is of last Friday. These current stats, they generally come out Fridays from a source I follow. But 91% of the companies as of last Friday have shared second quarter financial results. Based on the numbers, second quarter earnings for the S&P 500 are on track to decline 3.5% from last year, which would mark the fifth straight quarter of falling earnings. However, 70% of the companies in the S&P 500 have beat their consensus estimate. And remember, a lot of these companies were trimming their estimates earlier in the year, so now 70% managed to beat them. So it's sort of a mixed bag, sort of guide lower. Again, I think even that's what Target's doing. They're even guiding lower going into Q3 and Q4 in the hopes that they won't, any beat of those lower guidances could only help it rather than hurt it.
Yeah, I think you gotta look to own Walmart because they raised guidance. And one of the games that these companies have been playing for years and years, we all know this, is they guide lower and then beat. Excuse me. They guide lower and then beat. So Walmart's guiding higher. So I think that's they feel really confident, really, really confident. So I don't know if there's WMT, Mike. Have you taken a look at it?
Yeah, I have it up right now on my chart. It triggered. It triggered a trade actually a couple months ago.
Did we have a shake and bake on a daily?
I'm on the. Actually,
on the
weekly right now.
Okay.
It's hit its 200-week moving average. It's been trading here. It's sort of building a nice base, horizontal base. If we can get a close back above really the 75 level, we'd need a close on a weekly basis above 75. My next target for Walmart going higher is 79.50 to 80 level. So that's what I'm watching for on a weekly basis.
Is 80 the round number thing, or is it an actual part of the target measured move?
80 is the round number thing. Prior, let's see, what were those prior highs? Prior highs back from May of last year, which was a significant, triggered also significant sell-off. That prior highs were 79.94. So we're looking really for that 79.50 from a shorter term pattern to target prior highs and our end of a clear path move right around 79.37. So right, that upper 70, lower to mid 79 to 80 level would be my target.
Gotcha. Don't you have some McDonald's news for us?
Yeah, I do. I actually have McDonald's news and McDonald's chart pattern that looks like it could be about to trigger. I was reading earlier this week. Now, with the McDonald's was rolling out the kids' fitness activity trackers with their Happy Meals it's called a Step It Fitness Tracker. You know, it's you put it on the kid's wrist and it monitors the number of steps. It's like, you know, the cheap version of Fitbit from McDonald's. I was sort of thinking that's a pretty cool idea. Well, they just pulled the plug on it 2 days later because
I don't know what to do with McDonald's. I mean, profitable, right? Constantly profitable. What's the stock doing, Mike? Because I lost my charts.
The stock has a massive weekly, sort of sloppy double top.
Okay, so we might get a pullback.
Yeah, we'd have to get a close below 116.08 to trigger it. We're now sitting at 116.01, and I'm talking on a weekly basis.
Yeah.
If we do get that close, the range of targets for this would take it back to the 103.62 level to the 99.54, which is really the 100 level because you know how things tend to react at the round numbers. But if this does close, we could see a substantial pullback in McDonald's to those levels, to 103 to 100 levels.
Hey guys, for those of you that don't know, unless he says otherwise, we record these on Fridays. So when he's talking about a close on a weekly chart, that's today. So when the market closes, Mike, would you say it needs to close below?
Let me see, 116.08.
116.08. So if it closes today below 116.08, that has triggered, correct?
Yeah, I'd really want. I'm going to caveat this because it's another round number. When I see something at that round number, I'd like to see it close below 116, so 115.99 or lower.
All right, cool.
All aboard!
Yeah, there you go. Jump on this train going in the other direction.
And this might not necessarily, this could be a sell for somebody looking to take profits, or if you were looking to get into McDonald's at some point because they're a dividend player, this could be a good thing to now, you need to step to the sidelines until it retests that 100 to 103. This is not necessarily for people to short the stock, but hey, sometimes these tops or these topping patterns trigger, and that means step aside and look for a better buying opportunity later.
Hello.
Hello.
Hi.
9:30 on the dot.
Yes.
Run it as a segment.
I don't have a segment. It's a Whopperito.
Well, I'm still quite full from that Whopperito. A bit of a food coma right now. That was a lot of food in one burrito.
How long ago did you eat this Whopperito?
Yesterday.
Wow.
Yes. Hey, there's a lot of food in there. I'm a bit scared to look up the calorie count, only because I'm still quite satisfied at this point.
It's only, I think it's like 570 calories.
570.
570, but did you know, this was an interesting fact, 53% of the Whopperito calories come from the tortilla.
That is unbelievable. And actually, I thought that there was a bit more tortilla in my Whopperito than I would have preferred. I will note that I did get fries on the side, so depending on the calories with that, maybe
that pushed it over the top.
Yes, it did.
Well, I did 2 Whopperitos this week on different days.
Did you?
That
was a good idea.
First of all, I did it Monday. I had to do it Monday. I went there. They were pushing it. I went through the drive-thru and they were pushing. You want to buy our Whopperito. I was there for that, but I probably couldn't have gotten out of the drive-thru line alive without purchasing one of their Whopperitos. I did have them add jalapenos. That was my only, they pushed that on me though, but I like jalapenos. I felt pressured. And I succumbed to the pressure. So I ate my Whopperito, and I did, I thought it was good. It tasted like a sort of a southwestern Whopper in a tortilla. It was quite tasty, although I Skyped Stafford on Monday to talk about something else, and I saw him, he put on his video feed, and I saw him with a Whopperito on his plate. And his Whopperito did not look like my Whopperito. So this is why I had to go back.
Very interesting.
On Wednesday. Yeah, Stafford, you taught me something. We did not discuss what he thought about the Whopperito, but he taught me something about he taught me the best way to order a Whopperito. What was that, Stafford?
Okay, so yes, I'll prove my theory. I got one right here that was in the refrigerator. Because if I'm going to do this, we need actual R&D. We need real numbers. I'm not going to wing it. So
and perhaps the difference is because it's a new item, and maybe it's not in the chain, let's say, where people are making them consistently as they have been the Whopper for so many years. So I could see how there could be variations.
So yes, my variation is what I used to do with a regular Whopper, which is heavy all.
Oh no!
And the first two, the girth of the Whopperino, it basically exploded right in front of me. It was like a John Carpenter film. So this one is also heavy all, but it was ordered last night at 11:45 p.m. So it looks like it's intact as I open it up slowly. Did you ever see the movie Alien?
Oh my goodness.
And, I would say it looks more like the advertisement than the first run of the few. But the rule is order heavy all. It's an extra 15 cents. and it really makes this thing, much bigger.
It makes that thing 870 calories.
It's all
is
vegetables.
what it makes it.
It's all vegetables, though. It was actually, for anybody out there, make sure you follow Stafford's advice. That's why I went back Wednesday and did another one, heavy all, and that is the way to order it because it's like a Whopperito salad burger, Southwestern
So
style.
that doesn't include more mayonnaise and more tomato and more.
It's better.
It includes more lettuce, more tomato.
Yeah, it does include more of their sauce. They do put that in heavy all. I used to order heavy all no mayonnaise, but I decided to just do heavy all even with their queso sauce.
Julie,
But-
my Whopperino tasted like Taco Bell's blandest burrito.
Now let me ask you this. I read an article, The Street, will Chipotle stock be affected by Burger King's new Tex-Mex item? For me, that is a no.
No.
Oh, hey, well, Chipotle still it's diving again.
It's not because of the Whopperito.
It is. I'm blaming it on the Whopperito.
It's not because of the Whopperito. First of all, we're not a bad food review podcast, so we have to bring it back to stock, right? And first of all, this thing is nowhere. It's not even the same food group as Chipotle, and I'm not picking one over the other. I would order a Whopperito again, but it would be similar to Stafford, not in the way that Stafford ordered it, but it would be about 11:45 at night.
Exactly.
Okay, that's the only reason. That's the only way I would get one again. And by the way, I don't need the extra all to have it come out better. That thing came out wrapped. I mean, the Whopperito I ate basically came out with the paper all fully wrapped. They could have resold it. And that thing flew through me.
And so, I mean, there's. Oh my goodness.
It flew through me.
So to move away from that topic, so this product being released, I'm assuming because of the fear of the fast food slump, we saw that Burger King's sales, there was a lot of weakness in the U.S. and Canada, but there was growth in Asia and Latin America. So by introducing these new products, do you believe that this could help this fast food slump? And let's discuss why there is a fast food slump to begin with.
Well, it's your generation, quite frankly, in my opinion, the fast food slump, because the bad publicity that McDonald's got for some of their practices and their food and the Supersize It documentary and things like that. Fast food has just gotten this reputation for not only being unhealthy but unethical. So and I think that's to me is an almost irreversible trend.
So then, in terms of my generation, then what are we doing? Because I hear a lot of people saying that we don't even cook.
No, but it's Blue Plate, or there are a number of these companies, and it's not your generation. It's anybody that wants to do this, which is
not us.
Which is every month you get a box. Inside that box are the exact amount of ingredients, and some of the ingredients are based around something you cannot buy in a store. Period. No matter what right? Yeah. And then they give you an instruction manual, and then the person and their partner have a cooking experience, and then they have some adult cocktails, and then they Netflix and chill.
But that's going to replace sit-down restaurants. That's not going to replace fast food. My sister has 3 kids, and she tried the one called Apron something or other, and she gave the last 2 away. She goes, I don't have time for this. So that's not the fast food market. The fast food market is being replaced by better fast food. So it's not really a fast food slump. It's a bad fast food slump.
What about the delivery services, Grubhub? Are people looking at that for more convenience? In terms of rural areas, that is not often an option. But speaking of the food delivery service, yes, I'm actually receiving one tomorrow. But I have used Grubhub in the past over just going down the street and going to a McDonald's or a Burger King.
There's actually this undercurrent we do not see, but people do a majority of their shopping through Amazon. And things are timed to come out when they run out and all this. And Amazon doesn't make a big deal about it because they are taking standard supplies, the standard kitchen items, directly from local markets.
So if they are having this fast food slump because of the types of food that they're serving, then introducing the mac and Cheetos and hot dogs and a Whopperito would not necessarily then be a solid strategy for growth.
Well, every quarter you got to come up with a better
They
idea.
keep doing these food mash, or at least
Every
Burger King
quarter.
keeps doing food mashups, and they seem to be working. Like the mac and Cheetos was a pretty big hit for them, and they're only going to keep these around for a limited time runs. So
Yes, throw it at them and see what sticks.
You got
and
it.
not in the reference that was made earlier.
Speaking of Grubhub, stock has doubled this year.
The one thing I've noticed, I've used Grubhub for a few years. They have stopped using a lot of promotions. There used to be many, many, many more promotions. I think that was a strategy. Once they had a big increase in users, they were able to save money by not offering those as much.
What's the final verdict on ratings of the Whopperino?
It's a Whopperito.
it's a Whopper, not an Eno.
Damn it.
It would
Okay,
really be good if you made your own pico de gallo, right? You know, your fresh vegetables, and you put it and you use it as a base sort of thing. You know, you could use it for that, but really, it's just a Whopper taste inside a better delivery vehicle that is 500 calories.
For my perspective, I mean, I could see this served technically at Taco Bell, but that addresses the issue of families going to one location. And let's say, I mean, Bob mentioned your sister with 3 kids. What if one wants to go to Taco Bell, another wants to go to McDonald's, another wants to go to Burger King? Well, we're only going to Burger King because we only have time for that, and then they're satisfied with the Whopperito.
Again, I ask, final verdict on the Whopperino. What is it?
Whopperito.
Why do you keep saying Eno?
Because my name's Ichino.
So you think they were naming it after you?
It's the one I ate was named after me. It's the Whopperchino.
Well, I'm giving it. If I order it heavy all, I'm giving it a B+.
Stafford?
Well, it's better than a traditional Whopper because you can drive with it, and that's easier. So I like the Whopper. I've ordered the Whopper many times. If this was around, I would choose this over a Whopper. So there's your vote for that.
Alexandra?
I would give the Whopperito a B. I really enjoyed the normal Whoppers with cheese, even the Whopper Juniors. The reason I give it a B is because I think it would be very interesting to get it heavy all, and I think that could raise it to a B+ possibly. The only difference I do want to stress is that it has a little bit of a kick to it that does make it taste more like a burrito than the Whopper. So there is, of course, a difference in taste there, but overall, a B.
So I have 2 ratings for it. You know how economic data gets released and then revised?
Oh, no. We need a sound effect. Hold on. Stop. Scientific data.
While eating it, I would give it an A-, and it would be a B, except I did a little extra research and I found out that the Whopperino with 570 calories, the Whopper 677.
Oh.
So you can essentially enjoy a Whopper with a kick for about 170 calories less than a regular Whopper. And about $1 less, by the way, $1.50 less.
Very interesting.
So I would give it an A-, and then this morning I would revise that to a C+.
Oh, no.
All right, I would revise that to a C+.
Where's the toilet flushing sound?
It's not. It's just I went safe this time.
Okay, good.
Oh, no.
Okay, hang on. That was the perfect
falling.
one. Let's all be quiet so he can get that on recording cleanly. Go ahead, Stafford. That's perfect.
Then that's Bob's C+. Why don't you average the 2 though? You know how, because you have to smooth your data, Bob. You know they have the smooth data, so you do an A and a C. You're really at a C+ and A-. You're really at a B range.
Or a solid B, right? So what I'll do is I'll get another Whopperino and I will
go heavy all.
Yeah, I'll go heavy all, and I'll have a 3-month average by December.
All right.
Thank you, Alexandra.
Thank you.
Thank you so much.
Talk to you soon.
Bye.
Oh, we also can't ignore, there was we had Fed meeting minutes.
Yeah, we did.
And do you have any comments on those?
Yeah, I mean, they seem, let's just generalize on it. They're saying that they're still open to a rate hike and they want more data. I don't know what they're looking for. I mean, really, I don't know what they're looking for. Like the overseas turmoil has died down. Referring all the way back to Brexit, we have UK buyers buying up New York real estate. I heard an interview with the CEO of Macallan's Irish whiskey company, who was saying they were seeing significant bumps because of the devaluing of the pound. So England's fine, at least in the short term. I don't know what data they're waiting for. We have the same data we've seen in a while. We've got mixed consumer and economic data. We have strong job creation relative to this recovery, not relative to others, but relative to this recovery, jobs are strong. And we've got basically lukewarm to slightly cold GDP. So I wish they would just say we're waiting for things to get stronger, because that would send a signal to the market that, yeah, they'll hike, but nothing's coming soon, which is what I believe.
Do you think they would hike in September at all?
I'd like to see them do it. I don't think they will.
I would be shocked. And actually, the markets, after they release their minutes, the
no
earliest
chance.
I could see them hiking is December. And right now, the odds of that are 48.2, so not even 50% yet.
Yeah, that's what the Fed funds are saying, right?
Yeah, that's what the Fed funds. We always cite the odds. That's what everybody uses for the odds.
Yeah, I think the odds is the wrong word for that, but that's what everybody uses for sure.
Then the reason I use that term is because everybody, so if you hear...
Yeah, it's a common term.
It's a common term now. The odds of a rate hike, well, they're citing the Fed funds future. You know who needs some credibility?
Who?
Japan.
We are coming out with more stimulus.
Well, right now the yen is trading at 121. It's retested its 100 mark. I think that 100 mark is a critical line in the sand. They keep trying to now talk more weakness into the yen. It's been very, very strong. It came off of one of our weekly rotation zones. We talked about it retesting the lows, which it virtually has. Now you have Honda, not the company.
Yeah, the guy.
The guy who's the Japan's ambassador to Switzerland, which I don't know. They're pulling out all the stops now.
Why are they listening to him?
He had some great quotes this week. Monetary policy hasn't been eased enough. That's a direct quote. If they rein their stimulus without achieving a 2% inflation target, quote, we will never, ever be able to get out of deflation. Never, ever. There's more than a 50% possibility of bold monetary easing measures in September. The yen's strength is clearly excessive. They just keep trying to... I guess they're going to have to buy up all their stock market, too.
I have a solution for Japan.
Hold on. And let me finish this one thing. The bank should raise its monetary base target, or the amount of cash it pumps into the banking system, by 25% to 100 trillion yen. So, which is about, in US dollars, about $1 trillion a year. So it should bump that up from its current pace of 80 trillion yen. The effects are diminishing, so let's do more.
Here is I have the perfect stimulus plan for Japan or anyone else. Okay? There's all these backdoor ways to get the consumer sparked. They want to get the consumer to spend money and to save less. Go out and spend X amount on your credit card, and the government will give you 125% of that money back. That's the stimulus plan. Prove that it was spent in a retail fashion. Go buy clothes, go buy shoes, go buy cars, go buy refrigerators. Put a limit on it. Give them 110% of the money. Stop buying stocks. Stop giving it to banks that don't lend it. Go out and tell the people, prove that you spent this and we'll repay it to you.
That's helicopter money.
Exactly. Do it. Just do it. I don't remember which Fed watcher it was this week, but one of them said that even the Fed is now starting to say stimulus doesn't work for the general economy. It just doesn't, because it doesn't make it down to the individuals. So I'm against stimulus in general. I think the economy should just work itself out and people should suffer and come back. We've talked about this before. Some of the businesses that Mike and I have started, we would not have been able to start because it would be too expensive. The staff and the other things would be too expensive if the economy were good. So you start businesses in poor economy. But if we're not going to let things fail, just give it right to the guy. Tell him you don't get it unless you spend it. That's it.
And then you get 125% back?
Let's make it 110. Yeah.
Wow. And
it'd be less money than they've currently wasted.
Hey, is there going to be any, like, do you have to be at a certain income level or anything else,
Nope.
or could I do this?
You could do it too.
Oh, yeah.
Everyone. Just go spend it.
There's an arbitrage strategy there because you're going to get 110% back, so you buy goods that you can resell, and therefore you can
I don't care. That's transactions.
No, I'm saying there's an arbitrage thing here.
It's great.
Because you could actually figure out something, all right, if I get 110% back, and if I buy $10,000 of these goods, I'm getting $11,000 back. Even if I sell the goods at break even or a slight discount, I've now can pocket all that money and that's how Stafford will put it in the safe.
Can you imagine? It's like, yeah, but you won't be able to put as much because if I could buy it new or used from you, you're going to have to spend, I'm going to pay you less.
Well, that's what I mean. Even if you took a slight hit, you could take a 10% haircut on it, and still
but someone still spends it. So, imagine if between the three of us, we all went out and spent $5,000, and we all got $5,100 back.
Well, if you were getting 10% back, you'd get $5,500
back. Yeah. So we all got $5,500 back, not in cash. Okay, my $5,000 credit card bill was actually. You know how we could do it? Government issued credit cards. Now, what people would do with those is they would sell those for the cash, right? But somebody would end up spending that $5,000 of government money in an establishment. Otherwise, it would be useless. So it'd be like a government gift card.
It's too complicated to work for government bureaucracy.
Well, you would think it's like the simplest thing in the world, but the stuff they're doing is more complicated and not working. But I agree with you. From a perspective of what government can achieve, it would be way too easy for them to figure it out.
They can't even build a website for the American Care Act.
All right. Speaking
the Unaffordable Care Act.
Speaking of, we had another large insurer commit to dropping out of 70% of the state exchanges that they were in. Aetna.
Yeah, it's that they can't keep that thing alive. Because essentially you're insuring all the unhealthy people without, and you're charging all the healthy people, and there aren't enough healthy people signing up for it.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gann, ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
Yeah, my why of the week, which is essentially helicopter money. That's kind of what I wanted to talk about. So you'll hear the phrase helicopter money, and helicopter money references the visual of just dropping money from a helicopter, which essentially is what a lot of the stimulus has been anyway. It's just instead of it going from a helicopter to the ground, it's gone from a helicopter into giant tubes going into the banks and into the banks, essentially, because even when they buy stocks, it ends up in a financial institution. So the helicopter drops the money into a big tube, into a bank, and the bank is theoretically supposed to lend it. But when you have an environment of increased regulation and higher credit scores necessary for lending in a weak economy where you have more people with lower credit scores, the money never goes anywhere. It goes back and forth from the central banks to the bank in the form of overnight lending and borrowing, which we don't have to go into because the mechanics of that, basically, it goes back and forth electronically and never leaves the bank. It hasn't helped bank earnings, so it hasn't helped owners of bank stocks anyway. So you end up in a situation where you get high-end asset inflation and the regular economy continues to suffer. Part of the reason I'd like to see helicopter money tried, the asset buying that the central banks have done has been electronic onto bank balance sheets. They bought those things from banks. So the banks get the money, and they're theoretically supposed to lend it out. But there's regulations to those loans. You're talking a little bit about the secondary high-interest debt market, which is starting to rear its head because there's starting to be some credit agencies, startup credit agencies that are starting to report on some of these high-interest, high-risk loans, like report the people's credit and things like that. But essentially, I want to see them drop helicopter money because we're so far down the stimulus hole. And for the record, I was against all the stimulus. I remain against all this stimulus. But if we're going to do it anyway, they should actually do it. Because we're entering a period of time, and Mike and Stafford, you can comment on this or don't, because you guys know more about this than I do, where you're going to see an erosion of regular jobs. I read an article the other day that the number one job for men between 30 and 50 is truck driver. Any sort of truck driver at all, right? Whether it's a delivery guy for UPS or whether it's a over-the-road long-haul trucker. That's one of the largest employers of men between 30 and 50. And I forget which company, but somebody is already testing autonomous over-the-road haulers in the Nevada desert. Don't remember which company it is, but it's going to eliminate those jobs.
Yep.
So if we don't get out of economic morass before all the automation and all the advances in technology eliminates a huge swath of another subset of jobs, we got serious, serious trouble. So try it. Drop the money. Let's do it already. That's my why.
Well, speaking of dropping money, can I talk about my silver now?
Yes, please.
Which I alluded to earlier, and I was very good. I held off this whole time. So I've mentioned before, silver on a weekly basis has a double topping pattern, which would trigger if we get a close below, let me get the exact number, a close below the 1927 mark. This is one I would not be shorting. This would be a pullback I would be watching if I was going to repurchase silver. There are a couple. This is tricky one because it's going against our rotation zone, which is roughly coming in. The lower end of that rotation zone is roughly coming in where we'd lower to stop at about 1829. The full target on this is 1731. So if this does trigger, I'm going to then be watching for silver to trade lower and a possible bottoming formation to purchase silver. So this is not one I'd trade short, but this is one showing me where it could pull back to for another initiation of a long trade. I am bullish on silver, so I'm looking for places to pick up silver.
Very cool. I think that's a wrap, guys.
Was that like a Whopperito wrap?
Oh, that's funny. We fit a ton into this show between the Whopperito, another guest visit by Alexandra.
We've covered a lot of ground. I concur.
And we covered a lot of ground. Speaking.
We never got a vote on the sports corner sound effect. I don't think it was really.
I don't think you played it.
It's probably here's sports corner.
That's bowling. That's not a
probably
sport.
Not.
Barely a sport.
You can't have bowling.
Maybe we could have that for a hobby corner.
Speaking of beer drinking corner.
This is Bob Icino, and I will speak to you guys next week. Thanks for having me again.
And this is Mike Arnold, the more handsome part of the podcast, asking for your reviews on...
Yeah, review us, guys.
Review us. Please review us.